Good morning, trading world. It is April 18th, 2023, 8:40 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. Big bank earnings beat and continue to raise the tide of all boats around. There's a saying that a rising tide raises all boats. This is the effect of big bank earnings right now. As Bank of America reports a revenue beat, as did the big banks that reported yesterday, the financials continue to raise everything up with it. There seems to be a problem developing right now with Goldman Sachs and JP Morgan Chase. Can this be the first spoiler setting off a pullback for Thursday? We should get hints of the pullback today, with the bulk of the move happening Thursday, spilling over into Friday morning. Even with the pullback spilling over into Friday, this still may help Friday to be the biggest bullish day we have seen in a while. We'll be keeping an eye on Goldman Sachs, as there may be a short-term opportunity Friday for a bullish play, very short term, and then also looking for financials to short again thereafter. Be careful in the near term, as banks will start hoarding away cash for loan loss provisions, which could have an impact on earnings and balance sheets. I also think it may be time to start looking into buying some VIX spreads to get ready for a rise in volatility. Another thing to watch out for is, as the talk about raising the debt ceiling heats up, look for volatility to heat up with it. For now, this week, we see the weekly market makers expected move upper edge around 418, represented by the purple line here on the chart. I think we are headed there and beyond. It's been 2 weeks since we broke through either edge of the market maker's expected move. As you can see, this represents last week, and we trade price action stayed firmly between those purple lines. And the week before that, you can see the same thing, as we basically fluctuated around the black line, which is where the start of the week was. But today, early on, we seem to be breaking that pattern. So I expect us to really shoot and maybe go through and break the upper edge of the market maker's expected move this week. But it won't be straight away from here. Right now, I do see, like I said, a pullback coming that may take us a decent ways back. Hints of it starting today, and the biggest of it between Thursday and Friday morning. Now, with that brings us to the key levels for the day. And here we are back with the key levels on the day, starting on the resistance side. Our jack resistance is going to be that 415 to 416 area. This should be where the rejection starts. 416 is going to be pretty crucial today as one of those first rejection areas. Then we have our queen resistance, which is going to be 417 to the 418 area. That's going to be the next place for the most prominent rejection today. Then we have our king resistance, which is 419 to the 420 area. It'd be nice to get there, but I don't really see us quite getting there today. On the support side, we have our jack support, 414 to the 413 area. Then we have our queen support, which is 412 to the 411 area, which is where I see us kind of ending back up, touching around, and maybe starting to find that bottom around there for today. Then we have our king support area, 410 to 408. There'll be a lot more on that area tomorrow as I think we get ready to make our way back down to that area. The main thesis for today is bullish, closing above the 413.94 with a projected target high of between 414 and 420. The alternate thesis is bearish, closing below the 413.94 with a projected target low of between 413 and 408. The main channel we are in is between 397 and 416. Yesterday, market strength and breadth opened gap up and was range bound on the day. I expect strength to open really strong on the day, possibly at its highs, and showing signs of weakness as the day goes on. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish. The futures have a bullish bias for the day, with dissonance between the technical side, which is bearish, and the quant side, which is bullish. That brings us to the scenarios of the day. All right, here we are back with our scenarios of the day, starting first. And before I get into the scenarios, the probability for the first two scenarios are pretty much tied. But I'm going to go with what I'll be looking for first, which is going to be our trend day up day type structure. With the trend day model, we open gap up and start with a push back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find our midday chop around either the possible queen or king resistance area. And this is usually what happens coming out the second part of the day. We usually look to, or it seems as though we start to continue the primary trend for the morning, which would be up. But at some point, it turns into a head fake, and we get pretty much a fade going into, or at some point the second part of the day going into the close. So that is our trend day up day type structure. The one thing that we want to be careful of today, we have targets at the 416 area, and the major target of the day is the 418 area. If we hit that 418 area, we could see a big rejection at some point. If we start to line up at that 418 area, like here, we could see a decent size rejection that could take us back a good ways today. And that would be a trend day fail. Let's get to the next scenario. All right, our next scenario, again, the probabilities for first and second scenarios are pretty much the same. But our next scenario is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either the queen or king support before going back up with the same energy of force we went down with the first part of the day. So this is our rounded reversal day type structure. One of the key things to look at here is whatever indicator you follow that measures ebb and flow or even strength indicators. Price action could be weak or moving the opposite way of price action for some time before the move catches up with you. So if we have the rounded reversal to the downside, you could see strength starting to build in your indicator as early as outside the first 30-40 minutes of the trading day. And that strength begins to build and build, but price action just never catches up to it. And then at some point in the second part of the day, it jumps and just doesn't look back, catching up with that indicator or that strength that was showing in the indicator. It is quite possible for us to do the vice versa alert on the rounded reversal day type structure, and what that would entail is that you would get a little drop here, but a continued push higher after the cash open, taking us toward the queen or king resistance area. Finding our midday chop around either that queen or king resistance area, and then with the same energy or strength we went up with the first part of the day, we would look to go down the second part of the day. On this end, that same indicator that you were looking for, you would want to look for weakness in the indicator as early as the first 30 minutes of the day. And so that first 30 minutes of the day, even with price action going up, you're going to see a slight downward slope in your indicator that entire time. And then what happens is price action will usually catch up to it later in the day. So that's one of the things or ways to look out for the rounded reversal day type structure. Our last scenario is going to be our expanded range day structure. We could struggle early in the morning, rejecting at resistance, expect to find a pocket of strength to push us back up, most likely through the open and back up to the highs of the morning. So those are the scenarios that I am eyeing this morning. Again, I see a pullback on the horizon, and it should be a decent sized pullback coming into maybe Thursday, spilling over into Friday morning. So be ready for that. I hope this helps. The most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. Again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.